Hello, everybody. How's everybody doing? Jackson, just chill out, buddy. Jackson, you just chill out. You're fine, Jackson. What did you do back there? Jackson, you're fine. Just chill out. You have a whole bowl of food over there, Jackson. All right, guys, what's up? At least I remember to share the screen. All right, so the Daily Factor. We're going to have a special edition tonight of the Daily Factor. Now, the Daily Factor is based on my own metric, the MaxFactor, of course. But as far as the Daily Factor goes, we're going to have it. It's going to be a two-part Daily Factor. Hey, BR, how you doing? It's going to be a two-part Daily Factor. We're going to have closed-end fund Friday. We're doing one for you guys and then one for me. And then I picked a lineup of funds that I want to talk about, or whatever we can look at together. All right, so let's see what's going on here. COYY, that's not, I clicked the wrong thing. I meant to delete that. I'm sorry, ignore that. All right, SWZ. This is the high yielder of all the closed-end funds, and not by a little bit, by a lot. The next closest high yielder is OCCI, Bond Credit, and SWZ. I'll be darned. All right. Let's see here. Let's. I know you guys like that one thing, but I just prefer. I know CEF Connect is way better than this for closed-end funds, but I just like a look at the chart and just kind of seeing what it, everything kind of that. Anyway, I'm just used to seeing it this way. Okay, so. This one, a total return securities fund. I forgot about this one, but why does it only say 3% there? And on the MaxFactor, it's way higher. Maybe they paid a special dividend or something. That's probably what it was. Anyway, all right. Then we have OCCI. ECC. All right, so let's check these out. OFS Credit Company. Pays a big yield, pays 27%. Another one was EC something. ECC, okay. Do you like any of these, Brad? I think I got these from you, and I put a couple more in that we found or something. Eagle Point Credit also pays 28%. All right. Next is BPI, yielding 25%. NAV just getting hit on this thing. NAV getting hit on all of those. Maybe not so much on SWZ. COYY is that's the worst closed-end fund I've ever seen right there. Look at that COYY. I don't want any of that. Holy cow. I know, I'm just joking. Obviously, that's not a closed-end fund. That's a good old covered call fund. But the closed-end funds, though, haven't been doing great either. OCCI is down 15. ECC on NAV alone. They're paying a big yield, so they still might work out. Depends on what you need. All right, BPI. Let's go check out BPI. Grayscale Bitcoin premium income. So they sell. What are they doing here? They're just writing options on the Bitcoin Trust. All right, that's cool. 17% yield. Those Bitcoin options pay a lot, but it's the same problem that a lot of them have had lately. The NAV just got hit. Like the same thing happened. That looks like a chart of blocks or a chart of ULT. Now granted, those funds are bouncing back fast. I would hopefully this one will too. Doesn't look like it's bouncing back super fast. All right. Let's look at the next one. Oh, yeah, the Gabelli Media Trust. Okay, pays about 24%, at least according to this. I think my numbers differ sometimes. They shouldn't, but they might. This has kind of been in a long-term. Well, it looks like it's made a bottom. It's definitely bottomed out. This thing's going higher. I'm sorry, Jackson. I didn't see you there. This thing's definitely bottomed out. We'll look into that in a little bit. That's actually part of the second. I have some bonus coverage, and I think Maggie's included in that bonus coverage. Of course, I'm not going to forget Maggie. All right, but we got to get through this first. So this Gabelli Media Trust. Now let's go back over here. So that one pays a good yield, but its NAVs hasn't been great. But anyway, BCAT. So we have BCAT and ECAT. They're down about the same, and they pay about the same. And anyway, CLM, we all know what that is, 17% yielder, and it actually has positive freaking NAV. And of course, like I always caution, my metric is probably not a great metric for closed-end funds. It doesn't consider the rights offering. It also doesn't really consider that they trade at a premium. So definitely for fun and entertainment only, especially on the closed-end funds. All right. But it's just one of many things to look at. It's fun to see how much they all yield and how they're doing NAV against each other. So you can see these other ones are in the 12 to 15 club, which is usually a prime club for NAV retention. Uncovered called funds it is, but it's bonds and credit. The things they're buying, I guess, are under pressure, and we've seen a bunch of that. Facts and FSCO. Let's go look at FSCO. Things are tough all over, I guess. These credit opportunities don't look like an opportunity to me. I'm just joking. They're value funds at this point. All right. And what was the other one? Facts, FAX. Oh, yeah, the Aberdeen Asia Pacific. I know these are really good. I'm just messing around. That is, at least it's straight across. The NAV, you could definitely call that NAV somewhat stable. Very stable. Very stable. In a covered call fund, that might even be too stable, but in this kind of fund, it's probably just perfect. Probably just perfect. Okay, so that's Aberdeen. So let's go back. We had FSCO. We've already seen that. ASGI, this one, is a monster. It's only a 10% yield, but it has 11.8%. What is this thing? What are these guys doing? I know they win every week, and we talk about them, and you guys love them. But yeah, we'll check Maggie. I think you're a new commenter. Halo Pines, and I need to change the style. I hate that. I like the minimal style right there that doesn't block the screen as much. All right. But yeah, so what are these guys even doing? It doesn't have positions. I know I should go to closed in at CEF Connect anyway, but I just like the numbers right here. Look at the 5-year performance, 3-year performance, the year performance, the year-to-date performance, the 6-month performance, the quarterly performance, which is really what the MaxFactor key is on. And that makes me feel good because I believe 11.81 is exactly what the MaxFactor had. Anyway, but it's doing a good job. It's doing its job. But yeah, that one's obviously awesome, and it has good track record. Anyway, all right. So that's closed in fund Friday. We have a few more. HCal's not closed in fund. I'm sorry about HCal. ADX, I just had never heard of it before, so I figured it had to be a closed in fund, so I threw it in there. Um, we'll take a look at these. Oh yeah, this is actually this Adams Diversified Equity. Okay, I've actually looked this one up before, and this is an interesting fund. Heck yeah. I mean, heck yeah, this is interesting. Have you guys heard about this one? I forget who told me about this one. Low yield, but you guys know what a low yield means. Lots of upside, and it's just been rocketing up. I mean, anyway. All right, what was the other one? The other one was HCal. HCal's not. I mean, Sirloin is though, right? In UTG. Oh, UTG is a good one. I think I remember. We know who's going to win. The same one wins every week. But I mean, there are some. I mean, that's a good looking chart. 10-year performance of 42%, but that doesn't mean 42% a year, though. That just means 42% for 10 years. Like it made 28% for 3 years, but then it's not. It doesn't mean 42% a year. I don't think. Anyway, well, in any event, it's doing a great job lately. All right, so let's just let it roll. Let's let it roll. Who cares about volatility? Let's look at the most stable just for the heck of it. All right, geez, one of these is a 3.6, this Sirloin, which is just a senior loan thing. Anyway, then we have SWZ is a 2.1. Wow. Now, this is the one, though, that's really not yielding 53%. I don't see what the thing is. Do any of you guys have SWZ? Because the MaxFactor says 53%, and this says all this does is pull the trailing 12-month, which is this. It gets it from a different source. Maybe these guys have had a split or something, but this obviously is not yielding. Heck, it's only paid 2 dividends, but maybe this is a special. Yeah, there's a $3 dividend. That's what it is. This calculation right here is not figuring the $3 dividend. All right, but my formula is, which is good. Okay, so but that's still not really a, this isn't really, I mean, it may be a good investment, but it's not an income fund, but it is a closed-end fund. All right. All right. Well, that explains it. All right. Let's just let it rip. I mean, we've seen who they are. I want to see who the most dangerous ones are. Of course, the stock ones are the most dangerous. So go figure. And the credit ones, whatever. All right. So here we go. Number one, ASGI. And who could blame you? Because it has higher NAV than any of them. And even though it doesn't have a higher yield, I mean, it's a good combination. It's fairly safe. It has market stability, and it's, and it pays a decent yield. I mean, that's all you could ask for. That's a good looking one. Then we have ADX, yielding almost 8%, NAV return of about 7. CLM's always a good one. What do we HCal? What's HCal? HCal's like an amplify fund, isn't it? I mean, how did I get HCal in here? I'm so sorry about that. Yeah. I mean, definitely not a closed-end fund. But anyway, let's look at it since it's here. Yields 10%. I mean, 1 year total return at -1. I mean, for the quarter, it's flat on NAV. But for the quarter, it's doing all right because it's flat on NAV and you're getting a dividend. But for the year, because it hasn't quite recovered, that thing's a dog. Forget about that thing. That thing's dead to me. All right. So you guys ready for the bonus coverage now? I was just joking about all that. Hopefully you guys' favorite fund is in there. Yeah, I know it. I found it. I'll replace it. Oh yeah. Well, I can't do it live. I mean, I don't even know where the MaxFactor is. I just missed it when I was putting it in there. But yeah, we know. Why is it? I mean, I'm with you on that. And also, I missed because I forgot that I had some. I just got the ones off the end of the list. I forgot that I've had some closed-end funds on here for a while, like YYY and like SABA or something. Hey, Bon, how are you doing? Yeah, it's a fund of funds of it, right? I thought it was an ETF that's made up of closed-end funds. I'm not saying I still shouldn't have put it in there, but whatever. And yeah, No, that's a good one. I think you guys are going to like the second part better. I mean, closed-end funds are interesting. I mean, these are some good ones. I mean, yes, YYY should have been in here, and it would have been up here too. HCal doesn't deserve to be here, but it's interesting it can compete with these. I mean, or whatever. I mean, anyway, yeah. But anyway, it's ASGI's game to lose every week in CLM. YYY is only CEFs. Yeah, and they have 60 of them. So it's, yeah. All right. The list I sent you, a lot of those on will challenge ASG. Okay. Well, I swear I'll get that list on there next week. You guys are going to like this next part. This is the bonus coverage, though. This is why you stick around. I mean, the first part was just, I'm just joking. All right. So I decided, guess what? WPAY turned 3 months old just yesterday. I think for some reason I've snuck it in and I've been using it for like a week. I don't know. But anyway, I just noticed that it's officially in. I did kind of estimate what it would be and snuck it in for a while. But anyway, I'm excited about that. I'm a fan and stuff. So I decided just to throw in some kind of similar funds. I mean, just no real rhyme or reason, just ones I thought it would be fun to look at. So let's look at these real quick. We have YSPY from Granite Shares yielding 53%. NAV under pressure, but a lot of these are YMAX yielding 74%, negative 15 on NAV. YMAG yielding 50%, negative 4 on NAV. Still not great. A heck of a lot better than YMAX looks on NAV anyway. It's about 2/3 better. I mean, 15 is pretty rough. Then we have XDTE. This is always a good one. Or it's one that, a lot of people like, and it always does well on the MaxFactor. Middle of the road, yield of about 50, NAV flat. Then we have WPAY yielding 60.82, at least on a trailing 12-month adjusted basis, because it's only been out 3 months, but an annualized or, whatever basis, it's going to come out to 60.82 at the rate it's going. But the NAV on this one has been under pressure too, a little bit more so than YMAG, but less so than YMAX. Anyway, but Maggie, I know, first of all, TQQY. So I wanted to throw that one in because we have YSPY in, and this is leverage, and of course, leverage it's getting hurt. It's down 11%, paying a big yield. Then we have Maggie. I threw this one in because I know you guys love it. And it's a real popular fund, yielding 33.8. And the NAV's not bad. I mean, negative 4, it's better than YMAG's. And remember, that's NAV only. It doesn't include dividend. But, I mean, that's pretty dang good. I mean, because it's been kind of a rough quarter for risk assets. I mean, not lately, but a lot of the ones have got hit. Especially anything in Bitcoin's been hit. But I guess evidently the Mag 7's fine, right? Anyway, then LFUI, that's an example. That one's got hit for 18%. Pays a lot of yield, but and NAV's not great. IWMY, I just threw this one in. It's not really leveraged. Just have another one. And then GIAX, I know that one's a popular one. And it actually, as far as NAV goes, compared to these other dogs, I mean, the only one that has better NAV is XDTE than I mean, at least over the 90 days of this test. So XDT's, going to come out ahead, of course, because it has this, because it has it has a little bit more yield. But anyway, okay, well, here we go. I guess let's look at which ones are the most stable. XDT is the most stable. Maggie's also very stable. 83% is stable. It's overall market. IWMY, GIAX, YMAG, YSPY, etc. And the winner is XDTE. I mean, because who could blame you? You have better NAV than any of these other ones. You tie with one of them, but basically better or tie with all of them. And you're paying 30%. I mean, that one's had a good quarter to be sure. So anyway, all right. Is it down for you? I hear you. I was just trying to throw some stuff in there to be fun to, but you guys wanted to see WPAY, I'm sure, and you wanted to see Maggie. And also Maggie beat YMAG. I'm always throwing YMAG out as a better alternative. I'll quit doing that because it's by my own metric. It's not. It's not. What I do is I compare two lifetime charts, and YMAG's beating it pretty bad or whatever. But over the past 90 days, according to my metric, which adjusts for risk, because risk is a big part of it, yeah, it's not. So I'll quit saying that YMAG is a better alternative. I mean, it looks like they're very close. I mean, but anyway, but I guess the thing is Maggie's one heck of a lot more stable. And when you add in the little bit of less yield, but you factor in the stability and then you factor in the NAV return, which is about the same. I mean, yeah, two good choices right there. They're close, but Maggie for the win. Anyway, WPAY's just got off to a rough quarter. This one, I mean, look at WPAY compared to XDTE. I mean, WPAY pays twice as much, so that's automatically a strike against it. And like I say, I guess the last 2 weeks has been good, but the prior month before that, a lot of these sold off. So, and especially the ones that WPAY has, the index isn't really down that much. I guess we could look at that. Or where is that? Let's see. I have that open somewhere. Well, actually, I don't know if I do because I was in another screen. No, I don't do that. Anyway, all right. Well, yeah. So did I answer? What did you want to look at? Maggie? I mean, Maggie's, yeah, Maggie looks good. Looks better than YMAG. All right. But I'm with you. Like I say, I wasn't endorsing any of these. I'm with you on not endorsing any of them. We're just looking at the numbers. And this is, like I always say, it's just one 90-day slice in time. It might do better right now, but, it might have been a worse bet a month ago, and it might be a worse bet a month from now. But it's just, that's why we do this every night, though. We kind of keep an eye on the good ones. Anyway, you saw an SEC filing for NLSI or NEOS long short equity income. Yeah. No, that's awesome. I can't wait. Randy, thanks for the tip on that. I'll review it the day it comes out. I will absolutely review it the day it comes out. You're certainly welcome, Halo Pines. And Bond has a bunch of Round Hill. They're good ones. I mean, they're objectively good. Yeah, TDVI was that, and that one's not in the MaxFactor. Is it BR? I need to put that one in the MaxFactor. Okay, I'll check it out, Randy. Yeah, symbol will be yeah. I've asked Jay why he didn't do one of those, and he acts like it won't pay enough. And he said you guys would hate it because it'd only pay like 8% or something. Because if it's long short, it's totally hedged. I don't know. We'll see. I mean, we'll see what NEOS does. But I've asked him several times, why don't you just do a long short or a delta neutral? We'll see, though. I mean, we shall definitely see. So for my party next week, gosh darn it, I found out that Ambassador Kwan has Yield Max on Friday also. I didn't know that. I hope that I didn't schedule my thing at the same time as he did. NSLI prospectus okay, perfect. Wonderful. Hang on, I'll go get it. There it is. I'm going to try to click on the actual prospectus. So I don't think it links to it, does it? No. Maybe if I go right to NEOS, maybe they have a link to it. Knee high. Did any of you guys have knee high? Maybe I looked in the wrong spot in the Discord. I'll look again. Maybe is it this one? Yeah, it's that one, but it's not. It's not the thing though. It's just the X posting. I need the thing. Maybe you put it down here in prospectus updates. Yeah, here we go. This better be the thing and not the link to. Yeah, it's perfect. I knew I could count on you guys. I knew I could count on you guys. All right. You bought Ehide this week. All right. Let's see what this thing's going to do. I mean, the most important thing is what they say they're going to, what their goal is. High. It says high monthly income. Okay. So that would make me think it's, it's going to be like double digits or something, which could be interesting. All right. If they can make a double digit fund where the NAV didn't move, I mean, but I don't even think they can do that. Okay. So here's the principal strategy. So they're going to do a long short strategy, go figure. But let me see if there's anything there's specific. Yeah. It's just a long short strategy and it's a proprietary investment process. It doesn't look like it has leverage. It says the long portfolio will consist of about 30 companies. The fund is not limited to the respective size of position in a single equity, so they can put it all in NVIDIA, I guess, or whatever. The fund generally limits any single position to a range from 3 to 7% of the fund's AUM. When taking a long position, the advisor relies on a bottom-up approach to determine whether when to buy and when to sell equities. The advisor selects equities that has a view that's the best expected return, mixture of factors, blah, blah, blah. I'm trying to see if it involves options, if they do anything else, but probably not. So no, they buy good companies and they sell bad companies. So they have 30 portfolios in the good company. Short portfolio says 30 companies as well. It looks like it's the same thing. Well, the fund generally limits its short positions in a single issue to a range of 1.5% to 3% of the fund. I bet their short book is like half the size of the long book or something. Oh, and it does say an option strategy or. All right, that looks like standard stuff. Option strategy. The fund's option strategy seeks to generate monthly income in addition to the yield it receives from the long short strategy. The option strategy utilizes a put spread consisting of a sale of exchange traded put options with a notional value of 100. All right. So they're going to buy a put spread. The advisor may actively manage the written SPX put spread. I don't understand if they're going to buy or sell a put spread. The fund's option strategy is designed to seek and generate a positive return, rising and flat. Probably sell a put spread. In a positive return in a rising and flat equity market, it may generate a positive return in equity markets that are modestly declining. It says the advisor may. It says the put options would be in the SPX. Anyway, I bet they're doing that as a hedge, and then they can't get hurt too bad. They have a long short, and then they have a put spread on. So anyway, I'll look into that more. But yeah, that looks interesting. I mean, there's nothing like that. I mean, YieldMax has one called Smart Allocation or something that's going to be like something similar, I think. It's going to be some kind of risk parity type fund to funds thing. But yeah, no, that's awesome. Thanks for bringing that to my attention. Y10, what is Y10? That's got to be, it's got to be one of their target 10 funds, don't you think? Or is it 10 cent? Maybe a 10-cent yield fund? I mean, 10 cents, surely not. It's got to be a target 10 fund. Maybe it's SPY target 10. Yeah, and there will be. I know. I just found it. But yeah, no, absolutely, there will be. It says the fund's option strategy seeks to generate monthly income. So it means there's probably selling spreads, but selling put spreads. So that would be probably like a lightning spread. Yeah, basically, except synthetically because they don't own the index, but they own a long short portfolio. Yeah, this is going to be really interesting. This is going to be really interesting. Maybe like YMAG. Oh yeah. Oh, maybe like a 10% target fund with YMAG. I was wondering why they don't do the. I think the target 25. I think 25 may be a sweet spot, and I was hoping they would do some target 25s. They would move some of the indexes. I was thinking maybe even they could move Biggie. It would make Biggie not get as much NAV upside, but I think more people would buy it because people aren't excited about the Biggie's yield. So, but interesting. Well, I'll look at that prospectus whenever it heads my way. But yeah, and it could be like YMAG. I mean, I agree with that, Bond. It could absolutely be like YMAG. Randy says Alti is neutral. LLL. Yeah, BR TDVI that Marcus and I were chatting about this morning looks really good. Let's look at that. Why don't we? Okay, TDVI, 97 total holdings. This is oh, yeah. Okay, well, I guess I'd missed that conversation. So this is the First Trust. These guys have one of the oldest covered call funds there is, FT something, I forgot. Anyway, TDVI, it's the Technology Dividend Target Income ETF, NASDAQ Technology Dividend Index. So, yeah, looks like they're trying to turn like a NASDAQ portfolio into like a 7% dividend. And look, they have NASDAQ-like returns, half year, 14%. That's probably about right. Year to date, 19%. Is the NASDAQ up 19% year to date? Probably. I mean, I don't know. I haven't looked. Yeah, but that's a good looking fund. Well, let's just run it. Let's just put TDVI up there and run it against the NASDAQ. We'll run it since inception. Yeah. It looks like it just basically, I mean, it almost reminds me of QLDY, the way it tracks so close to the index. Now, QLDY is only a couple of months old, so, but that is, I mean, the NAV's up. Not a lot, though, 19 to 28, but it's up. It definitely hasn't almost doubled like this other one, but this thing pays like a 7% yield. Heck yeah, that's a good looking fund. That's a good looking fund. You think it's in the top 10? Yeah, probably so. Probably so. With performance like that, it probably is. I need to do some kind of end of the year special or something. I need to figure out something end of the year. I mean, I'll figure it out. I'm excited about my influencer show next Friday. I think it'll be fun. I'm looking forward to it. All right, guys. So I'm gonna let you guys get out of here. It's Friday night, and I'm sure you guys have better stuff to do. And I'm going to take Jackson on a walk down the street. All right, guys. I'll talk to you later.